This is going to be the most important video you're ever going to watch on trading, and more importantly, on trading psychology. And I promise you, no bullshit, I'm not going to waste your time. Everything in this video is so important, I've even busted out the whiteboard. What we're going to be talking about in this video is going to be risk versus reward. This is a staple, kind of like one of the commandments of trading, but it is the amount of money that you are willing to risk for the potential reward that you have. There is this misconception within the market that people believe that you have to be right all of the time. And I want you to ask yourself, where the fuck did you get that from? Who told you that you need to be right 75, 85, 95% of the time? Probably was not a successful trader that you actually know. It's one of those things that people just say like, oh, you need to be right, 70, 80. You don't. And we're going to fucking prove it. This video is going to blow your mind, and we're going to start right now. So like we said, RVR. So what that means basically is, let's say that this stock right now is trading somewhere at $100. If we were to enter this position at $100 and we believe that the stock can move to $110, that means that we have a potential reward of $10 per share. It's not that bad, right? Now, obviously, whenever you're trading, you're going to have to calculate your downside, and this can be done through break of resistance or support, a break of pattern, or based off of a certain percentage of your portfolio that you don't feel comfortable in losing. So let's say that under our next level of support, that would be a loss of $10. Let's say that you have a 50% accuracy rating, which is actually a coin toss, meaning that every single time you take a position, it's a toss up on if you're going to win. If you were to take 10 positions, let's say that on average, half of them or 5 would be losers. 5 times the $10 loss is going to be $50. And let's say that the other 5 times we win, and we win $10, then that means 10 times that 5 is going to be $50. Therefore, we did not lose or make money. We ended up breaking even because we lost $50 on all of our losses and we gained $50 on all of our winners. But now let's take a look at this and say, what if we were to clean up our downside loss? The fact that we are risking a 1-to-1 RVR, and the way that you find it is you take your potential profit, like we said, 110, and then you take your potential loss, which would be $10, and you divide them by each other. So 10 divided by 10 is 1, which means that in this instance, we have an RVR of 1, which is pretty bad. You have to have very high accuracy to actually make money with an RVR of 1, because you have to hit 50% just to break even. To start actually making profits, you have to be right 75% of the time, which is not easy. But now I'm going to teach you something so beautiful, something so simple that everybody sits here and says, if it were that easy, everyone would do it. And I'm going to tell you exactly why that's not the fucking case. And it really is that simple. So keeping with the same accuracy of 50% and the same take profit of $110, instead, let's say that we put a better stop loss in place. And instead of a potential drop down to $90, we're going to stop out if the stock hits $95. So what does this mean? We now have a potential $5 loss for every $10 gain. And if we were to run that out, that would be over 10 trades, 50-50, 5 losses equating 5 times 5 because we're losing $5 per trade. And we took 5 losing trades. That's a $25 loss. But because we were right 50% of the time, 5 times 10 means our profits are $50. So in this instance, being right only 50% of the time, literally flipping a coin because of proper risk management, you would have ended up making $50 over those 10 trades. You would be profitable only being right 50% of the time, which 90% of people who trade cannot be profitable. And I showed you how to do it with a very simple 2-to-1 RVR. This is a 2-to-1 RVR because 5 divided by 10 is 2. So that means that for every win, we are winning double the amount that we are losing. Something that you can note here is, let's say we make this even better, keeping the accuracy rate at 50%, because 50% many people can do. You don't even have to have skill most of the time to be right 50% of the time. But let's say instead, we were like, you know what, we're going to set a very tight stop loss at something like $98, meaning that our loss every time we take a trade is a max loss of $2, and our return is a max return of $10, or an average return of $10. As I start to show you some of the programs with, within the bots and the strategies that I run, you also get a better understanding that it's not going to be perfect. We're not setting a $10 take profit and setting a $2 stop loss every time. This is based off of averages. This would be a 5-to-1 RVR, meaning that for every single win, it will erase 5 losses. So let's go through again. 50% of the time we are right. Over 10 trades, that means 5 of those trades will be losses. 5 times 2 is $10, meaning we will take a $10 loss. And from there, 5 of those wins, just like before, will be winners, and we will take a $50 profit. And if you minus the 2, that is a $40 profit. So do not have to be right all of the time to make money in the market. And that's how I do it. I use proper risk versus reward. And I'm going to show you something right now that is going to blow your mind. At the bottom right side of your screen, you're going to see the tablature data for one of the strategies and the bots that we have within our Discord community. And this one's completely free. I think some of the things that you guys don't understand is that a bot, like what our bot is not some random fucking bot that we like coded on ChatGPT. This is my strategy that I have put into a bot that I have been using for a very long time now that I trade alongside. So if we look at our tablature data down here, you're going to see that over the past 2 years, if you would have followed this strategy, you would have made a 376% return, while the asset went down 11%. You would have taken 117 positions, and this is the most important thing that you need to understand from this video. Of the 117 positions, you would have won 50% of the time, actually 49. You would have lost 51% of the time. You would have made a 376% return, which is 3 times what many people could fathom as a return, and you're doing it only right half of the time because your average win is 4.8% and your average loss is 1.6%. And that, ladies and gentlemen, is how a fucking professional trades. And a lot of people might be saying, and a lot of people might be thinking, if it was just that simple, then how come everyone can't do it? And the reason for that is the only reason why I see my students fail at times. And I'm not saying this is entirely their fault, because I could become better at educating the psychology behind it more, right? Because it's just like fat loss. I can give you a diet to lose weight, but if you don't fucking follow it, what is the point, right? I need to be there to make sure you follow it. Same thing with trading. But the whole situation with trading is that most people cannot afford to take these losses mentally, not monetarily, straight up mentally. Most people cannot just hop on and just go and take a bunch of losses. Even here, if you guys are part of my community, you know we take about 50% of our losses, but we're fucking wiping it up every month because of proper RVR. And you can see here, you would have gone nearly a month with making barely, 6% within a month. Now, I think that's phenomenal, but it's not like this is going to change your life or be absolutely insane. But the point that I'm trying to get across to you is that RVR is the single most important thing. And here's the deal. When you have great RVR, you don't have to be good at trading. Straight up. You really don't. I'm not that crazy of a trader. I don't sit here all day in front of the fucking computer looking at every single indicator known to man. Like, I really don't. I just use a fucking good strategy. I use proper risk versus reward. And the biggest thing that I do for my students, which the link is in the Discord, is completely free for all of it, except for the premium, which is free for the first month, because we just give everything out for free. I want you guys to get fucking proficient at trading so that you can therefore come and trade alongside of me and afford to hang out and trade alongside of me. That's why I give all of this out for free. But overall, RVR is so important. With proper risk management, you cannot blow an account up. You cannot wake up and be like, I'm down 65%. I saw people within our Discord community and like straight up, I'll just be honest, like, you're a fucking idiot if you blow 65, 70% of your account in a day. Like, you're a fucking idiot. You don't deserve it. You don't deserve the money. You don't deserve the profits. You don't deserve the consistency. You are not disciplined enough. And I am saying that from the bottom of my fucking heart because I was there before. I was the most undisciplined trader fucking ever. And I'm telling you, like, I'm going to say it as your friend and as your boy that, like, if you're blowing 60, 70% of your account up, like, you are not ready for this shit. You're not taking it seriously enough. You're trying to YOLO your way in and out of positions, and you're just not ready, right? The market is not a hustle. The market is not a way to go out and make money. The market is a fucking magnet for money once you've built that core competency, and then you can allow the best trades to filter to you. I don't go out every single day on my charts and look for every single trade that I humanly can. I sit there, I set all of the bots within our Discord community, which is completely free, and the upgrade is free for the first month. But I go through and I set all of my criteria for all the tickers that I like to trade, and I set my bot up and my strategy is based off of that. And I allow the trades to come to me. If the alert hits and I like the setup, I take it. If not, who gives a shit? And if I lose money, cool. If I don't, I don't care. I don't tie my fucking ego and my self-worth to how many times I am right with predicting the stock market. Like, I don't. And if you do, then you're playing a losing game. Guys, I hope this video helped. I fucking love you from the bottom of my heart. I hope that, as this was probably a little bit of a harder talk, something that you guys probably needed to hear. And if you want to learn more about this, we talk all about it within our Discord community and within our free courses. One of the courses that we have, once you're in the Discord, you go to the courses and seminar section. The one is a technical analysis course, which talks a lot about the technical setup of risk versus reward and how to figure that out. But the Disciplined Traders course is an entire course that I created off of the book by Mark Douglas, which changed my life. And that is completely free. And that's all about psychology in the market and the things that we're talking about in this video. Thank you guys. I'll see you tomorrow. Peace.